Good morning, traders. It is 9:02 Eastern U.S. time on Thursday, the 9th of September, 2021. Today is the first official day of rollover in the U.S. indices from the December U1 contract or U21, depending on your data feed, to the December Z1 or Z21, again, depending on your data feed. This is episode number 2069. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'll try to say that without choking. First things first, I'm going to remind you about this rollover. It starts today. However, some of you may have seen the notice in the chat. May have seen a notice in the chat that I will be staying with the September contract in an effort to eliminate the roll effects. I'm just going to continue to track, quote, and trade the September contract, the existing contract, and I do that by forcing my charting platform into that contract. So everything I'll be quoting today and everything you'll be looking at will be based on the old contract, the back month, instead of the front month, which is December. Okay, so let's dive into the pre-market summary sheet. You'll notice that this is a static sheet. This was posted on Twitter. It is not in real time. There are issues with displaying data in real time for some exchanges, and we want to avoid that conflict. So just a reminder that this is static as of 8:50 Eastern. Still, same information. The overall market posture is neutral. No key earnings today. We're expecting the EIA gasoline and crude oil stock changes today at 11 Eastern because of the Monday holiday, a 30-year bond at 1 Eastern, and Fed's Bowman at 1. At 2 o'clock, we get Fed's Williams. The S&P and pretty much all the indices are neutral, just basically unchanged, sitting at these levels. In real time, the S&P is down 2.5 points or 0.06%, currently trading at 45.10 quarter settlement. The settlement price is around 45.12.50, maybe something like that. And the copper's higher, crude is lower. Crypto is kind of mixed. I mean, one up or down 1%, basically unchanged in those products. The S&P, however, if I pull up the real-time sheet here, the S&P has a bit of a balanced profile. We've got, in real time, we have 277,000 contracts, well above the 252-day 1 sigma of volume. However, just remember, this continues. This has a rollover effect as well. So everybody who wants to hold a position in the ES that was in September will start rolling or doing a calendar spread to move their contract into December, and that's going to be a huge contribution to the volume here. Volume increases around roll and expiration for various reasons, including delta hedging next week, and so on. Inventory, overnight inventory is 100% short. 100% short. All volume has taken place below the settlement price. The current range is 28 points in the S&P. 28 points from 45.13.5 to 45.01 quarter. A 44.85.50. The point of control is 45.01 quarter. Quite a bit of activity. Just as we saw as we were coming into yesterday, I'm expecting the market to be actively discovering prices today again. Again, what you're seeing on your screen is the September contract. If your prices are different, then you have rolled to December most likely. So that's what we've got here. Looking at yesterday's plan, yesterday the primary scenario is for a market that squeezes up into the 20, most likely squeeze up into the 20, fail through yesterday's low, consolidate, and then push the double O and O2. And then I was looking for it to squeeze down into 44.93, 44.93, right down here, 93, with the extended target here in asterisks of 82. 82 to the downside is a big target area below. And the key element here is that we break the weekly low at 45.10, 45.10.75, as it were. And if that happens, then we expect it to fall fairly rapidly into that 92, 93 area, potentially 90, as there's little support below. You can see it from this Friday trade here. There's very little support here until the 90 area. And we have a point of control at 82.50, and that's where this target of 82 is coming in. Here's what actually materialized yesterday in our review segment. Let's clarify. We opened right here at 1250, which is basically where we closed. Open at 1250, we push to 4507, squeeze into 1775, pull back to 1150, and then we push into the 20 quarter. So everybody who had an offer at 20 per plan probably got filled. It traded 20 quarter, consolidate lower high, lower low. As I talked about yesterday, the trigger is lower high failure to the last low, looking for it to sell off into 45.02. Remember the double O 02 that I pointed out. Failed to 02 here, pulls back to 02, uses it as resistance, and then continues down into 92. Remember, I pointed out the 92.90 area is a key area, key support area, and then beneath there, 82. And then we get this solid bounce back into the OS low, mid area. We consolidate around the mid area, and then we end up rotating down for a higher low at 95. Higher low again, trigger long, and look for a pushback into the open, which was 1250, stops at 12 quarter, consolidate, consolidate, consolidate into the close. We end up with a profile with a point of control in the middle of the range and a clear rejection of lower prices. The candlestick for yesterday basically looks like this. We open, we test down, and then we make the trip all the way back to the open. This is a market that has successfully tested down and has come up. So the attraction today is going to be 45.20 again, which has made a very prominent point of control at this point. And then above there, 45.27, which brings us into balance from Tuesday. So that's the summary of yesterday. Scenario one was pretty much spot on. The stock zones were pretty much spot on. We don't expect that every day, but coming in with a plan helps us hold through all of this. Whatever happens here, whatever bids there are, it helps us hold through and scale at the proper areas. Again, 4502, 4500, 97 was a prior high from sometime early August, I think. 97 was a good scale area, and then anything ahead of 92 was a good scale area. This is the 30-minute chart. Again, this is September. The September contract, we open back up, and then we go into this slippery slide down through the Asian session. We open the European session right in here, and we find the bottom. This is a bit of an excess. We found an excess below 92. You can see here that it struggled to stay below 92. We found a bit of an excess down here, and it crosses the full session VWAP, full session mid, consolidates there for a while at the 4,500. 4,500, of course, major strike price, century figure, lots and lots of volume there yesterday. And same with the overnight session. You could see the protruding volume profile here at the 4,500. Lots and lots of consolidation there. And then we finally set up a base, consolidate, break out higher, and now we're in a position of pushing the overnight high. We just pushed the 1250 overnight high to 1350, and we are inside of the prior week's range again. The delta and volume overall are going to be quite difficult to read. You can read them on the footprint to see how the auction is facilitating trade per price, but the overall delta is going to be tricky because auto spreaders are going to hit or lift the market once the proper premium that's selected by the trader has been achieved. They'll execute at market on both sides. And so what that does is it scrambles the amount of information that we get from Delta. So Delta through till probably Wednesday of next week. Wednesday's normally when we are 95% done with the roll. I know Friday's Friday, quad witching Friday's next Friday, the 17th, is it? But by Wednesday, we will see that the pace of the roll has gotten to a point where it has achieved about 95% or so of its job completed, and at that point, we could start leaning on Delta a little bit. Although Delta at these levels has been quite deceptive, the overall market remains one-time framing down. Okay, so you could see here that we are trending down once we put in this all-time high way back here at 49.50. We've put in a lower high. We've been making lower highs ever since. So the question becomes, do we take out the 2025? If we take out the 2025 for today, we are set up to see a short squeeze most likely into 27 fairly quickly, and then for us to start pushing into the 30s and new all-time highs again. There's no reason not to treat this as another pullback in this environment. So this chart is wrong at ESU21 is what we want. Let it rebuild. Because it rolled, you can see there's a big gap there. So this is the correct contract now. And looking at the big picture on the daily, you could see that we broke into the auction from 2 weeks ago. And this is where that 44.82 level comes from. We got to 92, and then overnight we got to 85.50 on the overnight session. And so this is where it comes from. Once we break below the 1075, we're in the auction from 2 weeks ago. What is the most important price in that auction? There are some other key areas in that auction. We see the 92 up here, 94. But overall, what we did is we poked into last week's auction and we've come back up. And right now it's trading at that 45.10, which was last week's low. So it's teetering. And what we have to watch out for is, does it end the one-time framing down? Look at this all-time high, lower high, lower high, lower high. do we take out, given that we have an excess here yesterday, an excess low? In other words, we found buyers yesterday to bring it all the way back to the open. That's a significant piece of information. Once we found the excess, do we turn around and come back to 20, where the point of control for the week so far is? And if we do, then we are likely to quickly push to 27, consolidate it to 27, and then your guess is as good as mine as to the next move, but most likely another attempt at the all-time high. Okay, so that's the overall picture. Let's take a look at what's expected for today. Make it nice, short, and sweet today. Nothing outstanding. Yesterday, by the way, yesterday's Trader Bite, if you didn't listen to it, yesterday's Trader Bite represents the kind of market structure and setup coming in that is outstanding. Like I said yesterday, it is a day to focus on the open. Really need to focus some pretty good setups and opportunities coming our way for yesterday's trade, and it did exactly as expected. Not that we that doesn't mean it has to do it in order for us to make money, but it just makes reading it much easier. So if you have not listened to yesterday's Trader Bite, I invite you to do so to get the logic behind why the 20 was expected and how the targets were achieved. I went through it. It's a bit of a long one, but it's worth listening to in my opinion. So here we are at 45.10. At the 45.10 open auction in range in value of yesterday, I'm looking for a reversion back, a pullback into this 4,500 area. So let's put that on here, the 00, poke through, and then I'm looking for it to bounce back to the open and squeeze the 20. Remember, the 20 is key up here. The 20, and then start working towards 27. 27. Push into 27, poke, and potentially pull back into the close as it rebalances at the close. This is what I'm looking for as a key scenario for today. Why am I reversing my view of what I said yesterday? The reason I'm reversing my view, again, is because the auction has clearly stated that it opened above the week low, the prior week low. It poked through the next balance zone or the next areas below last week. It poked through and it came all the way back to the open at 1250, and I'm seeing that, I'm reading that auction as a rejection of those lower prices. And if we're rejecting lower prices, then the most likely path is to find sellers. And we find sellers by doing what? We find sellers by advertising higher and higher prices. I'm going to entice you to come in and participate by showing you a higher and higher price. And those prices, since we tested the 20, those prices are likely to carry us into the 27. That's when the next anticipated flow of sellers is going to come in. Okay, so that's the primary scenario. Now, failure of this is actually quite significant. If we fail to do this, if we have an open auction that pushes the 20 and again impulses down, comes off, and then starts tackling the 4,500 and can't hold, and we take out yesterday's low at 92, then we are likely headed to the 82 right down here. 82. Again, next key test area, the overnight low is 85.50, so we were almost there, and this will likely bring in more selling on Friday. Here's the thing. Been trading futures for 19 years or 20 years now. Rollover week has consistently been a high risk, low return week for me. Does that mean I go away? It's it's just a week where I'm just really very passive. I'm taking an extraordinary amount of risk for little reward, and it gets really choppy. Once we get through expiration next Friday, we are off to what is um, the most active part of the year. We are off into the later part of September, into the fall trade. The biggest moves, remember, the Lehman Brothers crash occurred in late September into October. The China news from 20, what is it, 17 or 18, was in September, October. Uh, Election effects, Brexit was at this time of year. This is a very, very big time of year. So temper your expectations for the next week or so and understand that rollover brings in a lot of participants and a ton of hedging. And the hedging is done in the futures. Because if you have exposure to options in the SPX, the best place to execute a hedge to keep your delta stable, if you're a market maker or a fund or whatever, is to come into the futures. So you'll notice that the futures will have sweeps or whatever that are counterintuitive, and it just creates this locked in kind of environment. So that's where we stand. I'll leave you with those thoughts. Remember, rollover started today. I'll be trading continue to trade September 2021, the U1 contract through today and through tomorrow. And then we'll come back on Monday and trade the December contract into next week's expiration. Okay? Good luck, and I'll catch you tomorrow. Take care.